Boy, that time flies when you're having fun, doesn't it? But it's not that time of day again here, isn't it? Tuesday evening. It is January 26, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, tuning in for the first time tonight, it is great to have you with us because my job tonight is to help us find the best trade setups for tomorrow. That's Wednesday, not just any Wednesday, FOMC trading session. Got a big video in store for you guys and gals tonight. Charts are all prepped up in the background. As you can see, got a lot of great setups I'm working on for Wednesdays, kind of hump day, FOMC day action tomorrow morning. Got the S&P, we got the crude oil, and we got the gold on our radar for tomorrow. Before we jump in and put this plan together, I just want to make sure to remind you, we publish this video newsletter every evening with our best trade ideas for the following day. So make sure you subscribe to our YouTube channel, hit that little bell icon so you always get notified as well. That way you don't miss tomorrow night's video newsletter. And how about questions for me tonight? If you got any questions, definitely drop those questions in the comment section below. I'll get them answered as soon as we're finished up here this evening. And as always, if you tune in every evening to watch this video, if you love this video as much as I enjoy making it for you every evening, always appreciate you guys hitting that like button here on the YouTube channel. So make sure you subscribe, drop those questions, and thumbs up if you enjoy the content here on this nightly newsletter. Enough of the introduction. Let's get taking a look at the charts. We're going into the FOMC day tomorrow, and you would never know it. You would never know we've got a big news report coming tomorrow afternoon. I'm joking around with you because you can see here we got ranges everywhere, right? Gold's in a range, oil's in a range, and of course the S&P's in a range. So a lot of what the plan will be tomorrow is fading breakouts, buying low at support, selling high at resistance, focusing on failure patterns, and ultimately breakout patterns. And so that's a lot of what we're going to cover in tonight's video news. I got a bunch of great setups here. Now, first of all, the buyers have control on the S&P, right? It's a bullish market. We talked about the bulls come off that low last night. It's a bull market into a trading range. I'd love to buy below the range, but you'll notice we have rotation off the high, which means there's one very specific entry setup. We're going to go into more detail tonight. I definitely want to buy a pullback on the S&P if we can get it. But because of that rotation, there's one particular entry pattern or entry setup I'm looking for tomorrow. I'll talk more about that tonight as we dive into this video. In the middle here, right on the oil, right in the middle here, we got a kind of the tale of two ranges. I've got one range at the 60s. I've got one range up at the double zeros. If you're a market profilist, right, you've got kind of a double distribution day, right, kind of the B-shaped day. So with the bears in control right now, I've got my eyes on that $53 a barrel. I'd love to get short up around those highs. I could also get convinced in trading a breakout down here because with that weekend gap down at $52 even. So got some pretty good opportunities here as we go into oil tomorrow. We'll talk about that kind of double distribution and the best way to trade it for tomorrow's trading session. And how about gold, right? Gold, yeah, gold. You definitely know there's something coming because gold is flat as a board right now. What I love about gold though is we had that move up and then came down, right? Now we still have this great area of resistance overhead. I would love to short the pops on the gold tomorrow. We do have some concerns down here below the range. So if we do see a breakout tomorrow morning, we'll talk about some specific setups to avoid selling too low or buying too high on the gold. So lot to cover here tonight on the video. S&P's ready, oil's ready, gold's ready. Before we jump in though and get these setups all broken up into small bite-sized pieces, let's take a look at the schedule for tomorrow. Like I mentioned earlier, tomorrow is not just your average Wednesday. It's not just your regular hump day. It is FOMC day. The FOMC meeting began this morning. 8 times a year, the FOMC, the Federal Open Market Committee, meets for a 2-day meeting, and on the second day, we get the FOMC announcement. Now, this is very similar to the ECB announcement that I believe we'll get next week or the week afterwards, where you'll get this announcement, and then about a half an hour later, you'll see a press conference, right? So there'll be the number will be announced, the official release will be announced. Usually it gets leaked a little bit before 2 o'clock, and then you'll have the Fed press conference at 2:30 where, the news media can, ask him softball questions and he can answer them, however he wants, right? So that is typically going to eat up a lot of the afternoon. And what it does is it puts a big sense of urgency on the morning session. I always get pretty excited ahead of an FOMC Wednesday because I know, we focus on the morning session in our trade room every morning, 8 o'clock to about 11:15, 11:30, right? I'm going to training until lunch. But, tomorrow morning, our focus will be that scarcity mindset in that, again, first half of the session. Not a lot of professional traders are going to try to wrestle that FOMC announcement. In fact, remember, if you're thinking about trying to trade the FOMC announcement, remember that, yes, there is money to make during that crazy volatility crush that we see right in the wake of that. But usually the easier money is in reaction Thursday. Now, we'll talk about Reaction Thursday in tomorrow night's newsletter, but while all the rookies are fighting over ticks and paying lots of commissions on Wednesday afternoon, professionals know the big moves we see in the afternoon, right? The big volatile, just unpredictable, really dangerous moves we often see in the wake of FOMC, usually the day after is where the low-hanging fruit comes, right? The storm comes through on Wednesday afternoon, it shakes out all the leaves, and all the professionals can go in and pick off all the good fruit the following day. So don't waste but the moral of the story is focus on the morning session. And I know it's very tempting, trust me, believe me, if it was easy, I would recommend it, but be careful with the afternoon tomorrow. Save those bullets for the easy stuff, right? The low-hanging fruit on Thursday. And we'll talk more about that as we go into tomorrow night's newsletter. Now, as you can see, there's no shortage of news tomorrow morning. The big headline news of the morning session is that durable goods orders at 8:30 Eastern time. The manufacturing numbers have been red hot over the past few months, right? The ramping up of the of distribution and the vaccines. I mean, the manufacturing has been red hot. The durable goods orders will confirm or deny that. Markets will likely be paying attention to that tomorrow morning at 8:30. And then, of course, if you like oil, we've got that 10:30 petroleum status report. Don't forget, I don't trade the actual oil report. In fact, I will bracket that news report 10:15 to 10:45. We'll talk more about that tomorrow morning in our trade room. But the most important thing, though, for tomorrow is that durable goods report at 8:30 Eastern time. And then again, later on in the day, the FOMC announcement. Expect that craziness from 2 o'clock till probably 3:15, 3:30. So it eats up a big chunk of the afternoon. Save those bullets for Reaction Thursday. All right, got a pretty good lay of the land here. Oh, one more thing going forward. I'm going to talk a little bit about this later on in the week. We are watching rollover on gold. It slipped my mind in last night's newsletter. Some point in the next 3 days, it's tough to tell right now, it doesn't look like tomorrow, probably Thursday or Friday, we will be rolling forward on gold from the February contract to the March-April, right? Every 2 months, right? So it's 0246. So April is the next contract month on the gold. We'll talk about that more as we go into the end of the week. But now you know what the schedule looks like for tomorrow. And again, I can't emphasize enough, please be careful tomorrow afternoon in the wake of that FOMC announcement. Slippage is nasty, right? Your stops won't hold. An easy way to lose your year's worth of gains is to get caught in the wrong side of the FOMC announcement or any major news event for that matter. All right, let's jump in. S&P, oil, gold. Let's grab a look at the S&P first. Now, what's the key takeaway on the S&P here right now? We have a bullish market that is rotating off the high. That's basically what it is. It's a bull market. And of course, we talked about that hidden channel, right? That trap in last night's newsletter, right? We talked about these entries in last night's newsletter. So you go back and watch last and miss last night. But here we are, though. We are now basically in a range. It's a bull market. We're going sideways. And whenever I have a bull market, going sideways like this, I know that buyers would like to buy support levels, right? Like this trend line, like that battle zone. Buyers would like to buy support levels below the range. Buyers would also like to buy breakouts, right? Above the range. So we're looking to buy pullbacks or failure patterns, as I mentioned, are my preferred setup in a range bound market. Or if the market wants to go higher, we have that monster pendulum swing that we talked about in last night's newsletter. Right? This is that big weekly range from last week. If we measure the amount of the move below the range, I laugh a little bit when I say this because it's the most insane pendulum swing I think I've ever seen. But that 3,900 it's a cherry on top here for those bulls. So that's definitely some targets there for the buyers tomorrow, right? So buyers would love, again, buy below the range or buy that breakout above the range. As far as sellers are concerned in this market, we've got those highs up here. So sellers are looking for reversal patterns to sell off the highs. Sellers are also looking for breakout patterns to run back and take out those lows at 37.88 and change down there, right? We'll call it 37.90 just to make it easy. So sellers are selling off the highs or selling breakouts, right, as we roll lower. And of course, we want to stay away from the middle because ranges are balanced markets, right? The middle is a magnet. I don't want to be trading in the middle. I want to use that magnet to my advantage, right? Buy low, sell high, and again, focus on failures. Now, if I got what I want tomorrow, right? If the S&P gods called me tonight and said, all right, Joe, what do you want tomorrow morning? Preferably earlier the better because of FOMC announcement tomorrow afternoon. What do you want tomorrow? I would say I'd love to get a pullback, right? Get me down inside this. Again, I got a great support. I would love that support trend line. Again, bunch of swings down here. Got that weekend gap, right? There's that weekend gap we talked about in last night's newsletter, 38.30, right? That's the opening price from last Friday. So no shortage of support areas down here. I'd love to see us pull back. But here's the problem with that pullback. If you notice, we actually poked our head above that trading range and came back down in. So when I roll lower, this market is going to feel very, very bearish, right? It is. Why? Because of that pop above the high. It's really important that you can realize there's a very big difference between a bull market that's range bound that goes up and comes down, right? Than a bull market that just simply goes into the range and then pulls back, right? I can get pretty aggressive on a market. I can get pretty aggressive buying into seller failures if I buy underneath a bull range like that. But if that range begins and pokes its head up and comes back down now that momentum is a concern. So knowing that fact, right, knowing that rotation off the high is an issue right now. As the market pulls back here, there's one very specific and very simple setup I'm looking for, and it's a failure pattern because ultimately I'm looking for the price to pull back. I'm looking for sellers to try to break this thing out, right? I'm looking for the bears to commit, but because of that rolling over off the top, I'm going to let those bears try twice. I wouldn't normally do that, but again, because of that excessive momentum coming off that top right now, the key is going to be whether it be at support levels here or especially down at this trend line down here, I want to get that we call a nested failure pattern. I want to wait for the price to break down, wait for the bears to get short, right? Try them once. Wait for that higher high in price. Try it too, right? Now, once we have the bears selling once, selling twice, right? And sometimes these will be off, Fibonacci pullbacks, right? Aggressive bears getting in, more conservative bears getting in. There's a bunch of different variations of the way this pattern looks. Sometimes we get a trend line off the lows, and I can buy off of that, right? Off of that low. One of my favorites, though, is drawing a trend line off these highs and slipping it in for kind of like a hidden channel off of that, right? Off of that low, buying off that trend line, buying buying into stop losses, right? It's called a nested failure pattern. And again, because of that momentum coming over, I want to let those bears, right? Let them try twice as we go. So nested failures as the market rolls lower. Now, I can imagine you're wondering, okay, Joe, well, at what point do the bears actually take control? If you back this out a little bit, right? If you back this out now, strong move down, we pull back to the moving average. If the bears can jump off that moving average, right? You'll notice we saw a strong move down, they couldn't hold. Strong move down, they couldn't hold. If they can hold that pullback, that's called a 1, 2, 3, in this case, reversal, 1, 2, 3 breakout. In that situation, I can mark up the low, mark up those lows. What I like to do is go all the way up to the highs and try to find a way to pin it just a little bit above that high right there. That creates these hidden channels. Then when we pull back, we pull back to the moving average. Do it again here real quick. 1, 2, 3, right? So strong move down. The bears now hold it. We draw that channel off the low, pop it in off that high. When we pull back to the high of that channel now, we will usually be just barely above the moving average. This sets up for what I call a failure into pullback combination off of that high. So if the bears can get their hooks into this thing, but looking for those, it's basically just a buyer pullback that fails, right? We sell in a stop loss. I'll go into more detail in our video classes, obviously, but just the basic fundamentals right now, then into that pullback, right? So buyer failure, bear pullback. And again, where would I expect these bears to be going? You know exactly where they're going, right? They're trying to go back to that 37.88 and 3/4. They may take a pit stop at that 3800, right? But that's just lunch, right? They want to finish it off with a little sundae, right? A little dessert on top there, that 37.88 and change down there. So again, it's going to be a failure pattern, right? A nested failure in the pullback, or a 1, 2, 3 reversal, 1, 2, 3 breakout into what I call a hidden channel pullback. Now, you know, guys, you can learn a whole lot more about all of these pattern setups, failures, breakouts, and everything we talk about in tonight's video. I cover all of them in our free trading course here at School of Trade. If you haven't done so already, grab that link that just popped up there in the upper right-hand corner. Grab the free trading course. You'll learn my 4 favorite entry setups, my 3-step strategy, but most importantly, I'll send you examples of how we apply these setups to our favorite futures markets. That way you can really get a deeper dive and a better understanding of what a nested failure looks like, what a breakout looks like, and what a pullback feels like, right? Other than a reversal. So make sure you grab that free course. I'll put a link up there in the right-hand corner for you. Everybody loves the free course, and it will help you get the most of our time together right on this video newsletter. Now, again, as the market goes sideways, we sit on hands. What do we do as the market runs higher, right? What's the plan as we go higher? Well, you'll notice, again, we've got, and what you really do is kind of mark up this high right there, right there. There we go. And then you really could bring this right over here and say this whole, right, that whole area right there is an area of resistance. So what I would do is as the market goes higher, we know that range is a magnet, right? That range is a magnet. So first of all, can I sell above the high? Absolutely. This is one of the prime times to try calling a top on a market. There's a lot of times you don't want to call a top on a market, right? But when we have reached a major objective, right? Like, for example, the all-time highs, if I can get this market to pop up, right? Pop up, come back in, and then this is where we look for something similar to that, right? To that nested failure. This one's going to be a reversal pattern, right? So it's going to be a trend reversal. It's a bull market. It's a full reversal setup, so it has to be very, very good. Let those buyers try once, pull it back, let them try twice. And we call these crown reversal patterns. I teach a handful of counter trend reversal patterns in our video classes. This is the one that's easiest to spot. I like to go over this on the nightly news. There's a couple more we'll talk about tomorrow morning in our trade room. Now, keep in mind, again, always are variations of this that we'll teach in the video classes. But again, buyers will try once, buyers will try twice. I want that trap high, but think about how you can also add like a little hidden channel on there, right? And really start to add some reliability, some higher probability to that short. Now, don't forget, if we can get that short off the highs, we can measure the amount of the move above, project that down, and that's going to give you that target, right? So target 1 at the other side of the range, target 2 is that pendulum swing. So as we go higher, can I sell it? Oh, we definitely can. I would love to sell short off this high, but I'm not going to pick a top, right? I'm not going to just sell it as it goes higher here. I have to see these buyers actually come in, try a few times, and then short off that trap high. Now, as we go higher, can I buy this market as we go higher? I definitely can, but one thing we've seen lately is a strong move is not necessarily a breakout. So a strong move here, remember, they've got to hold that pullback and go, right, and jump. If I can get that 1, 2, 3 breakout, right? Remember, they didn't do it here. They've really struggled to break free of this all-time high, to break free of this range. It's not just today. It's not just this week. It's been going on for, boy, what feels like a month now, right? So we definitely have to make sure that we get that strong jump up, that pullback to the moving average, and that jump off the moving average. 1, 2, 3 breakout pattern. Now, where do we go from here? One of the things I like to do is look left and look for where I can kind of combine some of these highs, bring it down to that low. What that does is when you pull back now, you're usually going to be just below the moving average. This is where the magic happens. When we go below the moving average, bears will oftentimes come in and try to get short going back into that range. That's exactly where you want them. All of that momentum, anytime I see that 1, 2, 3 move like this, there's a big bullseye right back up to retest those highs, and that's exactly why we like to wait for those bears to get short so I can buy into stop losses off the low of that channel. Remember, we always want to combine 1, 2, 3 breakout, find that channel into what is basically a failure setup off of that low. And oftentimes, again, it's a failure into pullback combination coming off of that low, right? Now, there's a couple of variations of that again. We'll talk more details tomorrow in the trade room, but that's what you want to be looking for here if you're not with us tomorrow morning at the opening bell. And again, we have a good idea of where those buyers are going to try to make a run for if they can get this party really going. Now, keep in mind, there is one more breakout pattern to look for if the market really starts to rip, right? I'm not sure what exactly would cause that right now because you got the FOMC tomorrow afternoon. But, if the market really does start to rip and runs higher here, right? It's just what happens is it goes, doesn't pull back, goes, right? It's not going up and pulling back and going. It's just going, right? And it won't pull back here. When I see that type of stuff happen, something usually, sparks that rally. Look for that shallow pullback, that higher high, and that trap. So this is another great setup. This one won't pull back right away, right? It won't give you that 1, 2 jump, right? It just simply jumps and just runs. And of course, at some point, you're going to go, okay, this is getting ridiculous now. What you don't want to do, though, is chase after it. Right, that's the rookie pullback. The professional pullback is the one that comes on the trap that comes thereafter. And as always, look left, find some levels, find some hidden channels, increase your odds dramatically off the low of that channel. All right, guys? We call that a 2-try breakout. It's basically a breakout with a trap low. And don't forget traps. Traps are my bread and butter in a lot of specific situations. So grab that free course linked up in the upper right-hand corner and learn more about those traps. And really, again, all my favorite entry setups are covered in that free trading class. All right, we're looking good here. So now we've got our bulls, our bears, our up, our down, our sideways. I think we are covered for FOMC tomorrow. How about some oil? A tale of two ranges here on the oil. What do we think we got going on here on the black gold, the Texas T here? Well, we had that big bull run out of the into the closing bell yesterday. Anytime we see anytime we see a strong move in one direction, we expect a retest of that high. Now, did they keep it going? No, they did not, right? They didn't. They struggled, right? And you can definitely see what happened, right? Eventually, the buyers had a range up here and ended up rolling lower, right? Rolls lower, grinds into another range here, okay? So we basically spent, we finished the session with the bears in control momentum with a range-bound market. Now remember, what is a range? Ranges are where a lot of volume piles up. And so as I mentioned in the kind of introduction here, right, if you were a market profile theorist, as they say, right, you would say, okay, a lot of volume there, right? There's your double distribution, as they call it, right? And usually what will happen is the market will rotate back and forth until it fills in this area, right? By the end of the day tomorrow, this may look more like that, right? Like a typical market profile, volume profile would look. So the reality is that makes our job relatively easy for tomorrow, because we know there's probably going to be a lot of bears looking to sell that area up there, take their profit back, and just keep on rinsing and repeating until this thing fills in, right? Until we get enough more volume in between these two. So it's basically just a range-bound market with a bear bias to it right now, right? You'll notice the buyers got that strong move up. They did pull back and retested the high. If you're a client of mine, you know that means they open the loop and they close the loop. For the bears, we get that strong move down. We haven't retested that low yet. So the bears do have this sense of urgency, whereas the bulls don't have that. I know I'm talking a bit of jargon of code right now, but if you're a client of mine, you know exactly what I'm talking about, right? So be aware of that. The bears definitely have the edge on this market. So what does that mean, right? Well, the bears, of course, they want to sell above the range, because the range, remember, the ranges act like magnets. Right? So bears want to get short above the range. Bears would also love to dig it into that weekend gap, right? Remember that's last Friday's closing price at 51.98. So bears would love to get it on the downside with a breakout pattern, right? So we're looking to sell short with buyer failures, right? It's a range, or looking to sell short with bear breakouts, right? Going lower. What do the buyers want to do right now? The buyers have a big problem on their hands, because the buyers, even if they push up, right, they're still going to run right into resistance, and we'll be looking to fade that thing back down again. The buyers have to see a breakout, right? They have to push this thing back, right? They've got to prove it to us that they want this. Now, I will say, I'm not sure if you guys heard that announcement today from from President Biden here in the U.S. They canceled, or they basically chose not to renew the government leases for oil drilling, right? Or pumping oil on government land. This would normally spark a rally on the oil market, because what does that do? That decreases domestic oil production, and it basically forces the U.S. to go out and buy it from other places, right? It removes a lot of the supply, not a lot of it, but a good chunk of it. And, psychologically, you would think that would really send this market going higher. As you can see, it did not, So the news we saw today did not exactly spark a rally, but we'll see. Maybe tomorrow they do kind of. Maybe people didn't see it today. I don't know. The market's usually pretty good at picking up on stuff like that. I was surprised to see this thing finish right near these lows today, because of that headline, right? So that cancellation of government land being drilled on, or pumped on, or fracked on, or whatever technology they do these days, it's pretty incredible. But you would think that would have a bullish reaction to it. It might be tomorrow, right? So that would be a case for the buyers pushing this thing. But again, they have to get some very strong movement here for us to be a buyer, or we have to run this thing down, take out some of these lows, and then start to build back up, right? Going back higher again. So buyers have a tough time right now. The easier money appears, at least for now, until we know, until something changes tomorrow. The easier money looks like it's on the sell side here for all you oil traders out there. Now, it's a bear market into a trading range. I would love to get up in this area. Now, we talked about this last night, right? This is one of those situations where if all I get is a shallow pullback, I look for traps, right? So one scenario would be if we just barely poke our head, up into this resistance area up here, I'm going to have to be careful because, what I don't want to do is I don't want to go up, pull back to the moving average, get buyers coming in and try selling right there. That is not my idea of a good place to get short. Why? Because you don't want to trade inside the range. There's no money to make there, right? We don't know if it'll keep going lower. All we know is major support right there. So if I take that short, my risk is here, my reward is here. Right? Now, that trade might work. The problem is you take that trade 100 times, you're going to lose money most likely. And that keeps most professionals from taking that trade. And if most professionals are not in the trade, it's probably not going to be a very reliable trade to begin with. It makes sense? Right? There's that self-fulfilling prophecy behind risk-reward ratio. Risk-reward ratio is not just about stops and targets. Remember, professional traders, right? People who've been doing this for 30, 35 years, they are everywhere in these markets. These guys know these, and gals, they know these markets like the back of their hand. They're not going to take that trade. Again, it might work. Even a broken clock is right a couple times a day, right? Twice a day. But the key is you take that trade 100 times, right? 50 times, 30 times, you're going to see a lot of those fail, right? A lot of times what will happen is it'll kick. Right? And this is where this is where the good fruit is hanging to be picked up here. Okay? So if we do, again, if all we get is a shallow pullback, and we talked about this last night, right? Shallow pullbacks are fine, but you want to focus on traps, right? So remember, we're focused on failure patterns, right? Failure, failure, failure. As the market goes up, buyer failure. As the market goes up, nested failure, right? It all depends on what? Momentum. So if we pull back shallow, we pull back to the moving average. I want to sell up here, right? I'm looking for 1, 2, trap high and go. That is a great setup. But again, I want to wait for a trap so I'm not selling too low. If I get the move up into the battle zone now, that's where I want to be, right? Get those buyers coming in, get them to foolishly try to buy right into those highs. Now remember, right, I'm marking the major high. There's a top right there. There's a top right here. I mean, this thing's just littered with resistance overhead. I don't know which one of those is going to hold, right? And neither do buyers for that that part, unless, of course, they really blast, right? But if they get up into that battle zone, right, let those buyers come in. Let them try to take a swing at it. That tells you exactly where their pain points are, right? That tells you where the white flag comes out. Uncle, 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 get me out of this, right? That's where buyers will take their exits, and that's exactly where you're looking to get short into, right? I'm not trying to pick a top up here, right, guys? We're not trying to pick tops. Picking tops are really difficult. You'll get bounced out of good trades trying to pick tops. Wait for those buyers to come in. Think about, okay, if I was a buyer, where'd my stop be? I can sell into those stops, right? That's always my favorite. And I can also grab that pullback as long as it pulls back pretty well and we're not selling inside the range, okay? Failure into pullback combination. Another thing you want to think about is if this thing takes out those highs. Now, what's the problem if it takes the highs out? If it takes the highs out, that's a very strong move. And anytime we see a strong move in one direction, what do we expect? A pullback and a retest of that high, if not another symmetrical leg, right? Again, anytime we see a strong move, we expect to see a pullback, a retest of that high, if not if not an entire measured move, right? So if we do get that strong move up, what does that tell me? I've got buyers who are going to be fighting this. And because of that, this is where you let them try twice, right? They go up, let them try once, let them try twice, and then hit them, right? That way you know the buyers have wrapped that noose right around their neck, right? Let them try once, let them try twice. Now again, there's a lot of different variations of the setup. I love the trap, right? The trap the trap is the best because it traps high. It gives you the best possible entry. You're not always going to get that trap though. What is very, very common is, and again, like I said earlier, I like to look for that trend line off those lows, up around that high. It kind of creates this little hit, it misses that top, right? And then short off that trend line, right? So again, you've got a bunch of options here right now. I cover this pattern in a lot of detail, again, in that free trading course, right? Linked up in the upper right-hand corner, like I mentioned earlier. But again, you're selling off the trend line, you're selling into stops, and you're doing it with a fantastic risk-reward ratio, but you are respecting the momentum involved, all right? Great looking short off of those highs. And then, of course, if we do see that strong run up, right? If we do see that strong run up and the buyers can hold and they can jump, right? If they can really show us, now remember, it's not so much the strength of the first leg. It's the strength of the what is actually technically the third leg, right? 1, 2, 3. It's this leg that matters, right? It's that leg that matters. It doesn't matter how strong the first leg is. Can they jump off the moving average? When they jump off the moving average, that's your sign that buyers have taken control. Right? You know, in American football, right? The Bears have the ball. The buyers have ripped it out of their hands, right? It changes control of this. I hate to use a sports analogy or metaphor, but that's the way I think about it, right? The Bears have the ball in their hand right now. The buyers have to rip it out of their hand. Or the sellers might go, you know what, we're done. Here you go. You take it, right? News comes out. You know, some news comes out, right? All the bears go, oh, shoot, I'm not selling this thing anymore. Here, take the ball. Let's go, right? And it may jump. The bottom line is 1, 2, 3 jump, right? Again, jump off the moving average. Mark that high, mark that low. And remember, a lot of times, this will either be a failure into pullback combination, or this will be a trap, right? A trap low. Let me get a little different color here, right? Trap, right? Failure, pullback. I know I'm drawing this kind of, sloppy right now, but these, again, when you take the free course, you'll know what I'm talking about, right? Trap low, right? Trap pattern, failure pattern, pullback pattern, strength pattern, right? As we go higher. And again, if you haven't done so yet, grab that free class. That way you'll know what I'm talking about when I say a trap low off the bottom of that channel. So now we know how to get long here. Where do we think these buyers want to go? We talked about this last night. 53.90. That is a major top, right? That is a major top back there. What is that? The yearly highs? Yeah, pretty much. It feels like the decade highs right now, ever since the pandemic, right? Last March, it's probably yearly highs, probably, right? So we know we've got, last 12-month highs. So we know how the buyers will play it. We want to stay out of the middle, right? If we go sideways, stay out of the middle. How do we sell this thing as it goes lower? Selling it as it goes lower will be pretty easy. Couple options you want to think about is if the market pops up and comes back down, right? Let's say it pops up, comes back down. That creates your 1, 2, 3, reversal. Again, we sell it short off the highs. We then run 1, 2, 3. That's giveaway. Mark that low, mark that high. First test is the best test, right? Off of the high of that new hidden channel. Right? You're thinking bull trap. You're thinking buyer failure. You're thinking bear pullback, right? As it goes back above the moving average. I won't go into too much detail because we've already talked about those patterns and you've already taken the free course, so you know what those patterns look like, right? Or let's say we just dump, right? 1, 2, 3, move down. Again, if we see enough momentum going lower here, I can still grab that hidden channel because you're going to probably still get one more leg. Right? I have a saying in my trade room. If the move is strong enough, it doesn't really matter where it is. You're going to probably still retest that low. If the move is strong enough, it doesn't really matter where it is. The odds are very good you're going to retest that high, right? If the move is strong enough, it doesn't really matter where it is. You're going to probably see a pullback, a buyer failure, and back down again. Right, if I can go back to American football again, the offensive line pushing the defense back, giving the quarterback time to throw it, right? That's what that is, right? Strong move down, pushes everybody back, pops up on profit taking, buyers try to get long on it, and you're simply there to sell right into those stop losses, right? Those are some opportunities as we go lower. What I would really like to see, though, is this strong move down This would be a great setup. Lower low in price, shallow pullback, and a trap high. That would probably be the most reliable of all the setups because, as you can see here, we got some targets down here, and traps are always the one you want to look for whenever you're concerned about selling too low, right? So again, remember, strong move down, shallow pullback. That's the giveaway, right? The shallow pullback, that's the giveaway. The lower low in price and the trap high. Got some real easy ways to get short here as the market goes lower. To be a buyer, though, we have a big problem because as we go lower here, we've got to really be patient. Let the bears try once. Let them try twice, right? Draw that, right? Nested failure. At this point now, let them try once, try twice. We can buy off of trend lines, buy off of into stops, and try to go back up again. Remember, there is a big range back there. Right? There's a big range back there from last night's newsletter. So if we end up collapsing back down again, I can look to be a buyer down here. I just can't pick that bottom. I got to let them try a few times here and then take it higher from there. Okay, that's going to be one of those kind of game time decisions, as they say. I guess I'm full of those metaphors, right? Those sports analogies here today. But we'll have to look at that momentum once we get there, because if it's crazy bearish, I won't try to pick a bottom on that. I'll wait for it to go range bound, and we'll trade the range instead. So more to come on that tomorrow. But now you get a pretty good idea of what I'm looking for tomorrow on the oil. How about some gold? Wrapping things up here on the yellow metal here. What's going on in the gold here? Well, we were bullish into a range yesterday, right? And by the way, like I said earlier, we've got rollover in gear right now on the gold. You probably got notified this week from your broker. We're currently on the 221 contract. You can see in the upper left-hand corner here. We will be rolling forward to the 421 contract. It doesn't look like tomorrow, but most likely Thursday or Friday. It's tough to tell, right? We have to just come in every morning and see which one of these contract months has the most volume. Once that 421 contract has the most volume, we'll pull the plug on the 221 and we'll jump over to the 421. Remember, it's not expiration. Expiration won't be for another week or so, right? We're talking about rollover. When the volume moves, traders move, all right? So don't confuse that for contract expiration, right? You're not gonna get delivery of a gold bar, right, at your office if you hold on to that futures contract too long. Not this week, at least, right? Your broker will let you know. So we also know tomorrow is FOMC. It's important to remember that FOMC is the nastiest on gold. All right. Why? Because the FOMC is all about what? Monetary policy, interest rates, right? Things like that. So that is likely going to mean gold will be the most difficult market. It'll be the most volatile in the reaction to the FOMC announcement, right? If there's one market tomorrow, you've got to be careful in the afternoon tomorrow. It is gold. Gold is notoriously low volume in the afternoon to begin with, let alone on FOMC Wednesday, right? So promise me, you're not going to go blow all your tokens tomorrow, right, at your, on the FOMC announcement trading gold. I don't want to get that email from you guys saying I blew all my money, right? Well, I thought it was good. No, it's not good in the afternoon on FOMC day. Okay, had a bull market yesterday into that trading range. What do you see? Right, we see a breakdown, a seller failure, right, a blast higher. We then rotate back down into the range. What's that called? Rotation off the high, right? Rotation off the high. Now, as we go lower, what's the problem? Momentum, right? We're bearish. It's a range-bound market, but there's a hell of a lot of bear momentum in this market right now. You could also say, you could also go, actually, that's the chart. Right? Same thing, right? It's a bear market into a range. I'm just showing you guys the entire week so far, right? But it's basically a range-bound market, right? Market went up, failed, came back down in. Now we're going sideways, right? Sellers would love to get short up around these highs, right? Bears would love to get short up around those highs. Bears could also try to break out. But you got to be careful, though, because we get a lot of support down here, right? Pendulum swings down here. So breakouts will work, but I'm thinking maybe a 2-try breakout, little trapola, right? As we go lower, we'll be keeping an eye on that as we'll go into detail on this tonight. Buyers, of course, have to earn it. right? Buyers have to earn it. Buyers have to prove to us with a breakout pattern going higher. You know, the buyers have not been able to get this together here, right? So buyers have to prove it to us, or the buyers can get down and they can start to dig their way back into that range, right? Buyers can buy low, but they got to be careful buying high. So of course, as you can imagine, right, as we go higher here, you know, shallow pullbacks, traps, deep pullbacks, strong pullbacks are failures. So I want to be selling up in resistance overhead. This is a relatively easy plan here because you can see I've broken them up into two categories, one and then kind of two, right? There's two rectangles up there. The trend line is the best one, right? I'd love to see, if I had it my way tomorrow, we'd go up into that trend line, get those buyers to come in, try to get long. We'll know exactly what their stops are. We can sell into stop losses. We can sell the pullback as long as it's above the range, right? Failure pattern, pullback pattern, and ready to go. One thing you want to keep in mind is if the market was to go up, pull back and go like that, don't take that short. Wait for what? Wait for the trap, right? Shallow pullbacks, look for traps. Deeper pullbacks, you can use failures. If the market really jumps, right, takes out these highs, what's my concern? We're going to probably get the buyers are going to fight, right? They're not going to give up without a fight. Let them try once. Let them try twice. Again, draw that trend line over, right? Find that little hidden channel. Let them try once. Let them try twice. This is not a counter trend trade because remember, the market is bearish at this time. So as long as I get 1 and 2, as long as I can try to sell at some area of resistance, that is a beautiful, beautiful setup. And of course, if we jump up and if those buyers, if they can hold that pullback, right, hold that pullback and go, 1, 2, 3 breakout pattern. Again, if momentum is strong enough, you are probably going to get a pullback and a retest minimum of the high, right? So again, that could be a bear trap. That could be a seller failure. That could be a bull pullback, right? Lots of different ways we can find the specific entry off of that low. I'm not just blindly buying the low. Again, if you want to get a deeper dive into all those patterns, grab the little button in the upper right-hand corner and grab that free trading course. And then don't forget that major top, right? That major top is where those buyers are likely trying to go, which could easily happen. Let's face it. I worry though, because we'll probably, if we are going to get a big move up like that, it'll probably be in the wake of the FOMC, which is not exactly the most reliable time to be trading, as I mentioned earlier. Now, as we go lower, right, the bears have all of that momentum, right? The bears are rolling off that high. They have all of that momentum. My problem is the pendulum swing and that low. So as I go lower, what's my concern? It's not momentum. My concern is location, right? I don't want to sell too low. What's the best entry setup to avoid selling low? Strong move down, shallow pullback, traps, right? Traps, absolutely. Or one of those strong moves through, right? Kind of blow everything out, pop back up, buyers try and fail, back down to retest the low. Right? Again, if we see a strong enough move, there's a good chance that pullback comes in, the buyers try to get long, it's a good chance what? We're going to get back and retest that low. Anytime we see a strong move in one direction, there's a good chance they retest the same level. They may not go forever, right? But we don't need that. If we see a strong enough move down, and if we can get that pop, right? That pop, let those buyers try, sell into it, right? You've already built in that risk reward ratio on that trade. All right, guys? So as the market goes lower, I'm looking for traps, or it's really going to blast, pull back, and give me a chance to get in with some open space down there, right, for us on the bears. And then, of course, if we go lower, I definitely want to get down to that pendulum swing. That would be kind of the minimum. I wouldn't say minimum, but that'd be the best possible scenario. This trend line will work too, but the pendulum swing really is what you want to look for, because the pendulum swings are like magic when it comes to these ranges. Very, very strong support. So as the market goes lower, whether or not it hits the trend line or the pendulum swing, we're thinking about the bears, of course, having all of that momentum. And so we give them 2 tries. Let them try once, let them try twice. Do I get that trap? Right off the low? That will be ideal. Wouldn't be totally required. The range would be a pretty good magnet, right? Do I get a trend line off of that, right? Off of those highs? and buy back up. Remember, the one thing you don't want to do is try to go like this, right, as it's going up. You don't want to take that one, right? We saw one of those today in the trade room. Yes, it is the rule, right? It is 2 tries. What's the problem, though? Yeah, you're in the range, right? What do you do in that situation? What's the concern? The concern is location. Location is right. Traps, baby, right? Traps, what you want to look for if it slingshots back up. We see a lot of that, right? Where it'll V bottom, and you don't really get a good shot to get in because it's so bearish. I know it's not easy, but wait for it. Trust me, the patience is worth it, right? You'll get a higher winning percentage, right? Remember, we want fewer, more powerful, more reliable trades on our account every week. All right, guys. Boy, I know I covered a lot in this video. I moved quickly, so don't forget, grab the free course for a much deeper, kind of slower dive into all of these setups. And remember, tomorrow morning, 8 o'clock Eastern Time, and every morning, 8 o'clock Eastern Time, Monday through Friday, we'll be right together in our trade room. I would love to see you there, trading FOMC right along with us. It's easy to get registered. If you're on the blog right now, it's Sideways Marks, a big button right below me tonight on the blog. If you're on the website, of course, it's the advanced course you want. If you're on the YouTube channel here, I'll put the links you need in the description of that YouTube video. All right, guys, so grab that link, get registered. Don't miss tomorrow morning's trading session. At the very least, though, I hope you subscribe to our YouTube channel. That way you don't miss tomorrow night's video. And I hope by now I've earned a like from you guys here on this video. So keep in touch. If you have any questions, don't be afraid to call the office. I'm always here to help. We got live chat on the left, live chat on the right. Drop those questions below if you got any questions, and we will see you tomorrow morning at the opening bell in the trade room, or you better come back and see me tomorrow night on the next edition of this nightly newsletter. As always, my name is Joseph. As always, be well out there, right? Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.